What if I told you there's a completely legal way to eliminate most or maybe even all of your income taxes using short-term rentals? And no, this isn't some sketchy tax shelter. This is built right into the new tax bill that just passed through Congress that everyone's talking about right now. I'm about to show you the exact strategy my wife Taryn and I used to go from paying a hefty income tax to paying almost no income tax, while also building a portfolio of short-term rentals that replaced our W-2 income. But first, if you've used bonus depreciation on rental properties before, drop a comment below and let me know how much you saved, because I read every single comment and I love hearing about other people's success stories as well. So look, I get it. You're working 50, 60 hours a week, climbing the corporate ladder, providing for your family, but you're missing out on actually spending time with your family. And then tax season comes around and you're getting hammered paying 30, 40, or 50% in taxes. And it's like you're being punished for being successful. You're trading the most valuable asset, time with your kids, for money that then the government is just taking away from you anyway. And meanwhile, you keep hearing about wealthy people who seem to be paying no taxes at all, and you're wondering, how is this even possible? Well, today I'm going to show you exactly how it's possible. This isn't about hiding money offshore or doing something shady. This is about the exact strategy that real estate investors and business owners have been doing for decades. But now, with this new bill, it's even more powerful. So who am I to be talking about this? My name's Kirby, and just a few years ago, Taryn and I, we were successful corporate professionals making good money, but we were time poor and tax poor too. We felt like we were missing all those sort of precious everyday moments with our kids because we were grinding so hard at our jobs. And we realized that we didn't want to work until we were 65 and then look back and regret all that time that we had missed. So we started building a portfolio of short-term rentals using the very specific strategy that I'm going to share with you today. Fast forward to now, we own 39 short-term rental listings, and with just a handful of these, we replaced our corporate income. And we've structured everything to minimize our tax burden legally and ethically. So now everyone keeps talking about this 100% bonus depreciation that just passed with this so-called big beautiful bill that just passed through Congress, and for good reason. It's an incredibly powerful tool, but most people don't understand exactly how it works and how to use it effectively with short-term rentals. So in this video, I'm going to break down 3 key things. First, exactly what bonus depreciation is and why it's so powerful. Secondly, how this short-term rental tax loophole makes this even more effective. And third, the specific strategy that we use to maximize both our tax and income benefits at the same time. But before we dive in, if this sounds like something you want to implement in your own life, I have a very hands-on program where I work with people personally to set up their first really high cash flowing short-term rental using this exact strategy. So you can book a call with me at the link in the description below to see if this is a good fit for your situation. All right, so let's start with the basics. What exactly is bonus depreciation? So back in 2017, as part of the Tax Cut and Jobs Act, Congress implemented 100% bonus depreciation. This isn't brand new, it's been around for a while, but it's been slowly phased out over the last several years. But with the recent legislation, 100% bonus depreciation is back and it's permanent now. So here's how it works. Normally, when you buy business equipment or real estate, you have to depreciate it over many years. So that means you can write off a portion of it against your taxable income over a certain amount of time. For example, residential real estate property is typically depreciated over 27 and a half years. But now with bonus depreciation, you can now write off the entire cost of certain assets in the year that you purchased them. So this applies to business equipment or anything that the IRS considers to have a useful life of 20 years or less. Now, you might be thinking, yeah, but Kirby, you just said rental properties have a useful life of 27 and a half years, so this doesn't really help me. That's a great question. This is where it gets really interesting, and this is where most people miss the opportunity. So there's what's called the short-term rental tax loophole, and this is completely legal. It's built right into the tax code, and here's the deal. So if you materially participate in your short-term rental business, meaning that you're actively involved in the operations, then your short-term rental is considered business income. It's not passive rental income like long-term rentals. And this is huge because it means you can use the business deductions, including bonus depreciation, to offset not just your rental income, but potentially all other income as well, including your W-2 income. So let me give you a real-world example. So let's say you buy a $500,000 short-term rental property. Through a cost segregation study, which is basically having an engineer break down all the components of the property, you might find that $200,000 worth of the property qualifies for bonus depreciation. This could be things like appliances, flooring, window treatments, certain electrical and plumbing components, furniture and fixtures. All of these typically have a useful life of 15 years or less, so they qualify for that 100% bonus depreciation. So in the year you purchase the property, you could potentially write off $200,000 against your other income. So if you're in the 35% tax bracket, say, that's $70,000 of tax savings in year one alone. But here's where it gets even better. You can do this with multiple properties in the same year. So if you're a high income earner and you acquire 2 or 3 properties using this strategy, you could eliminate your entire tax burden. So let me share the specific strategy we use to maximize these benefits. So first, we focus on acquiring high cash flow, low cost properties. So these are typically multi-unit properties just outside of the major cities where the nightly rates are still high, but the purchase price is much lower than in the city center itself. So for example, we might buy a 2-unit for $300,000 that generates $3,000 of net cash flow after all our expenses. So the cash flow is fantastic, but the lower purchase price means we can acquire these without needing a massive amount of capital. Second, we make sure to qualify for material participation. So this means being actively involved in the business for at least 100 hours per year, or meeting one of the other IRS tests for material participation. There's 7 tests total. So this is crucial because without material participation, you can't use the losses to offset your other income. And third, we do a cost segregation study on every property. So this is where we hire an engineer to identify the components that qualify for accelerated depreciation. So this typically costs a few $1,000s, but the cost pales in comparison to the tax savings that you get from doing this. And I've screened a lot of companies that do these cost segregation studies, and I've used a lot myself, and I found a company that does it really inexpensively, and they're extremely thorough, and I put a link to that in the description below. Fourth, we structure our acquisitions strategically. So instead of buying one expensive traditional single-family short-term rental, we buy more cost-effective small multi-unit short-term rentals that still work as long-term rentals in a worst-case scenario. So if regulations change or travel shifts, we can convert them to long-term rentals and they still have positive cash flow. Finally, we set up proper systems for management so that we can scale without being tied to the day-to-day operations and without paying a professional property manager 25% of our income right off the top. So remember, the goal isn't just about tax savings. It's about building a business that maximizes your net income and also gives you the time freedom at the same time. Now, I know what some of you might be thinking, but Kirby, I don't know anything about real estate investing, or I don't have a lot of money to get started, or I'm too busy with my current job to manage rental properties. And these are all valid concerns. And these are the exact same concerns I had when I was getting started. But here's the thing. It isn't about becoming a full-time real estate investor overnight. This is about building a strategic portfolio that works with your specific situation. You don't need to quit your day job tomorrow. You don't need hundreds of thousands of dollars, and you don't need to become a professional property management expert or anything like that. What you need is the right strategy, the right systems, and the right guidance. And that's exactly what I provide in my Blueprint program, where I walk you through every step of the process from finding the right deals to setting up the systems to run without you being involved in the day-to-day. So if you're ready to stop letting taxes eat up your hard-earned money and you want to build a business that gives you both financial freedom and time freedom, then I want to help you. I'm currently accepting applications for my program where I work with you personally to set up your first high cash flowing short-term rental using these exact strategies. This isn't a course you buy and never talk to me again. This is a hands-on program where I guide you through every step of the process. So you can book a call with me at the link in the description below, and we can talk about your specific situation, your goals, and see if the program's a good fit for you. But spots are limited because I work with people personally, so if this resonates with you, then I'd encourage you not to wait. Look, I started this channel because I believe that life is too short to spend it trading time for money while also missing out on all the things that actually matter in life. We have 3 kids, 8 and under, with 1 on the way, and I'm constantly reminded of how quickly this time passes. So if you're watching this video, you're probably someone who's ambitious, hardworking, very successful, but you might also be someone who's realizing that success without time freedom really doesn't feel like success. The strategies I've shared with you today aren't just about saving money on taxes. They're about building a life where you have both financial freedom and time freedom, where you can be present for your family's most important moments instead of missing them because you're stuck in meetings or dealing with work stress. This is completely possible, and it's probably more attainable than you think. The tax code is written to reward people who invest in real estate and create businesses. You just need to know how to use it. So if you found this video helpful, make sure to hit that subscribe button and ring the notification bell so you don't miss any future videos. I'm constantly sharing strategies like this that can help you build wealth while also maintaining time freedom. And again, if you want to work with me personally to implement these strategies, you can book a call with me at the link in the description. Thanks for watching. God bless, and I'll see you in the next video.